Good morning, all. Steve.Parisi here with IBC Global. I hope your day is off to a fantastic start. Today, we have a guest that I've known for almost 10 years. Back in the day when I first started the company, Mr. Giovanni, or you prefer Gio Penna. How you
Sure.
doing, my friend?
Great, great. Thanks, Steve.
Yeah,
Good to be here, man. Appreciate it.
definitely. Thanks so much for making some time. I'm excited about today just because we've worked together for a while. Before we just start talking about cash value life insurance and such, though, just to kind of kick things off, if you want to provide just a little bit about you, your background, what do you do for work, and then we can transition into how we met. But if you want to start there, that'd be fantastic.
Sure, absolutely. It's been crazy that it's been almost 10 years.
I
That
can't
is
believe it.
wild before
Yeah.
all my kids and everything. But yeah, my name is Giovanni. I live in New England, USA. I am a devoted husband, father, and health IT whiz, I like to call myself. I've been doing that for nearly 2 decades, I'd say. Yeah.
Yeah, very nice. So IT, is that's been your focus like since graduating?
Yep, healthcare, software
Yeah.
implementation, large hospital systems, smaller practices, all over the map.
Yeah, got it. So a lot of attention to detail every single day.
Oh, absolutely. Yeah, big
Yeah.
projects, a lot of attention to detail, a lot of moving
Yeah.
pieces.
Got it. Very nice. Thanks for that. So we met about 10 years ago. It was for one sole reason at the time, which was a whole life insurance policy. If I recall, you were researching it specifically for the topic of infinite banking, but the focus was really on cash value, meaning that's what you're interested in. So if you want to talk about that a little bit, I'm curious just to hear you say how you came across whole life insurance, what your reaction was the first time. Let's start there.
Yeah, sure. So, yeah, about 10 years ago, I have an older sister, and she's very entrepreneurial minded. We're in the same industry and we're very close. So she kind of brought this topic to my attention. And it sounded really interesting, right? How you can grow some cash value, how you can access it, have positive tax benefits from it, while also creating some security for your family.
Yeah.
At that time, I didn't have any children of my own, but I had nieces and nephews that I was very close to. And I figured, hey, if anything were to happen to me, at least my family could have something to take care of, whatever, and a little bit extra, right?
Yeah.
So all those reasons, it sounded really enticing.
Oh, nice. From like the life insurance perspective, if anything happened to you, just them getting something, you like the idea of that.
And there was no particular reason. Like I'm still am a healthy guy.
Yeah.
At the time, I was in my, I don't know, mid 20s. I had
Yeah.
no reason to think like that, but it all sounded like a nice security blanket,
Yeah.
regardless for anything.
Yeah. Thanks for sharing that because most people we work with, the first thing they say when we get on a call with them, especially younger folks, is, "Hey, I don't really care about the death benefit. I am interested in the cash value. That's why I'm going to put X amount of dollars here." Like that's
Yeah,
usually the reason.
I get that.
Yeah, I get it 1,000% too. On that point, though, so with the cash value, because I know you researched a ton and talked to multiple people before we connected, like what was the area of focus or what you were interested in about the cash value? And it could be just the growth or some ways that you're interested in potentially using the policy.
Sure.
Yeah.
So I read some of the Nelson Nash book,
Yeah.
and that was like on top of all the content that you had posted on YouTube, I started there,
Okay.
and it was for me, it was okay. I was like the stock market seemed volatile to me,
Yeah.
right? And I
Hmm.
think that's it is what it is. And people do fine in the stock market. And since then, I've done fine in the stock market. But putting your money, I've always looked at it like this. It's like a really sophisticated savings account,
Yeah.
right? Somewhere where I can allocate funds to, I can access it very quickly without any tax implications. And I knew at that time I had just graduated and I was early in my career, but I knew I'd start making more and more money. My
Yeah.
trajectory was going up. I wanted places to put my money that was better than a savings account, making what, 0.25%.
At the
right?
time, if that, yeah, very low.
So, yeah, I was just looking for other ways to diversify where my
Sa
cash is being stored.
Safe place to put money. Yeah.
Yeah, yeah, yeah.
Yeah. Got it. I recall your first policy, that one you set up more so where it was set it and forget it, just with respect to the funding, where you do have flexibility with that, but you can only adjust one time per year. That's that Mass Mutual policy.
Yep.
But with that, so you started there where you had a low minimum, the ability to add more funds into PUAs to grow that cash value. What got you interested in a second policy though? I'm curious about that.
Again, I knew one day I would want to be in a position. I was focused towards a position where I needed a couple policies,
Yeah.
right? Maybe
Uh-huh.
I max one out and I got extra cash to max the other, that's
Yeah.
where I was headed, but also the flexibility of my guardian policy um,
Yeah.
in terms of policy premiums and things like that. Um, that was beneficial to me too. I knew I could afford a little bit more, but I wanted a little bit more flexibility
Yeah.
because at that time I was young, uh, had just started a family, just starting a family, and like sometimes I didn't have the budget.
Yeah.
So if I needed that flexibility while also continuing to create a solid foundation for myself.
Yeah, yeah, definitely. And that policy, I think, is set up where your minimum is at around $100 a month or something like that.
Yeah,
Yeah, but with the ability to pay up to 10,000 per year, where everything above that minimum of 100 just goes straight to PUAs, which shows up in cash value.
right.
And then one of the cool things too is so if you can pay up to 10K every year and you don't hit 10K every year, do you remember what happens with that unused, call it rollover space, meaning I could have paid in 10, but I only paid in three? What happens to that 7 grand?
It rolls over so it expands your mech limit, right?
Yeah,
Yeah,
yeah. And just as the years have passed, you've been able to take advantage of some of those catch-up contributions where now you can just slug a ton of money in and make up for lost time, which is really, really nice because I see it there and it starts to compound right away, which is
a-
always nice. Yeah,
absolutely. And then the fact that once um, you know, I've always really appreciated being able to borrow a couple bucks here and there,
yeah,
right?
yeah,
And without major penalties, without major paperwork, without major waits, right?
yeah,
And without losing the money that's been
yeah.
invested.
How do you typically take loans? Like, do you do that on your own through your online portal, or have you reached out to us? I know you've done it a couple times over the years. Like, what's your preferred method of loaning against your policy?
99% of the time, I do it myself, either right in the app or on the
Yeah,
desktop site. I think one time I had an issue because of maybe the site was being updated.
yeah,
So I reached out to you and you guys handled it for me within within the day, I believe.
yeah, yeah.
Yeah,
Very nice. And
super easy.
typically, yeah, no, I'm with you. We're big on that. Like, that's why we've got our staff in place for a lot of things. But a big reason is policy loans because people's money you're dealing with. So when they request that, it's got to happen fast.
Right.
In your experience with Mass and Guardian, when you've requested loans, what's the typical average turnaround time you've seen from the date you request it in the mobile app until it actually hits your bank account via direct deposit?
3 to 5 days.
Yeah, that's usually,
Max,
yeah,
max.
yeah. Mine's usually 2 to 3 with Guardian. Mass lately has been that, but yeah, 3 to 5 is definitely on the high end side. That's
Yep.
pretty cool. What have you been using the policies for? You mentioned borrowing here and there. Anything exciting?
No, it's changed throughout the years. Earlier in the days when my cash value was maybe just a few grand and I needed some money, uh, gosh, for whatever, maybe a baby shower. I think I needed $1,000 for so we could have a baby shower.
Yeah,
Or maybe certain Christmases I might have needed a couple extra bucks, right? So like little loans to myself like that, where I don't have to charge it to a credit card, pay 25, 28% interest. I don't have to take out a personal loan from one of these sketchy places, right, who are charging me and it's unclear the terms, right? I borrowed it from my own bank.
yeah,
And so now that's a little bit different. We're in a different financial position. We make decent money throughout the year. Our policies are much bigger now.
Mhm.
I think total probably over 50K in cash for my
Yeah.
policies. So now it's like when we need a new car, right? Or a new used car.
Yeah.
We
Yeah.
don't buy brand new. We buy really gently used, vehicles, um, within our price range. Maybe it's been 10 to 15, 20,000, but I'll go
Yeah.
take that money from my policy and then pay myself back. So I'm not giving it to a bank and I'm recapitalizing on any interest that I might have to pay back.
Yeah.
Um, so that's how we use it for bigger purchases now or appliances. We're ready to build a home. We
Yeah.
have cash now if we need a new stove or a new fridge or anything comes up. If yeah, so
Yeah. Very nice. Yeah. Thanks for sharing that. I mean, it's a very attractive, safe place to put my money where I'll see it continue to grow and I can use it while it keeps on compounding. I know over the years, as your financial situation has continued just to get better and better for you and your family, like you've got the life insurance policies, but that's just a piece. Like you do some other stuff just with investing and such as well, right?
yeah, yeah. I'm in the markets, right? I have a
Yeah,
401k. I've got um some IRAs. I've got things like that
yeah,
uh, in the stock markets. Got
yeah,
crypto accounts, right?
yeah.
Not too
Uh-huh.
much though, but I've dabbled in crypto. Um, yeah, that's and then cash in the bank, whatever we need,
Yeah,
savings.
got it. Now, when you put your money in different areas, like I'm just reflecting back when you started with cash value life insurance. You dug into it a lot. Like you had a lot of specific questions about the base premium, about the paid up additions rider. Here's my first year cash value. Here's the break even point. When you look to put your money in other vehicles, do you have that same process, or more so, are you looking just to diversify? This way, you can just continue to grow your wealth properly over time.
The process for where I put my money doesn't ever really change, right?
Yeah,
It's always pretty extensive.
got it.
Um, I want to put it in a place where I feel like it's going to grow, it's secure, and then ideally I have pretty fast access to it,
Got
right?
it. Yeah,
The market, you said it, you leave it there and you forget about it. That's what
yeah,
they tell you to do, right? It'll go up, it'll go down. Don't watch it, it'll stress you out. But
yeah,
that's never really happened with my life insurance policies. It's
right.
the numbers have always gone up, and it's always remained just super flexible.
Yeah, yeah, definitely. How do you make decisions if you're going to put money, whether it's life insurance, stocks, bonds, mutual funds, your 401k, whatever? Is it always the vehicle itself? Is it the company that you're working with? I'm just curious to hear a little bit about your decision-making process.
Good question. It's a little bit of both.
Yeah,
Look for a company with a solid reputation, right?
yeah,
Good customer service. So, I use Vanguard and Fidelity
nice.
for those other ones, and then Mass Mutual and Guardian for my life insurance. And,
Yeah,
these are companies that have been around for 100 plus years, probably.
yeah,
They're well vetted, well managed, and I feel comfortable and secure
yeah.
giving them my assets.
Got it. Got it. Nice. Thanks for sharing that. So, looping back to cash value life insurance. Long term, it's great. You've got the ability to borrow against it. When you first explored the policy or since owning it, I'll ask it this way too. Is there anything you didn't or don't like about the product or something you would say to someone considering it like, hey, make sure you ask your agent these questions or make sure you look at X, Y, and Z with this policy before just diving in? Because if you don't ask, that's where people get upset.
Of course, number one is how much is it going to cost me upfront or on a monthly basis or on an annual basis?
Yeah.
If that number seems way out of your budget or that's why it's good to shop so you get references, right?
Yeah.
Or if that seems way out of whack, then those are red flags to you.
Yeah.
Second question is, especially for these types of structured policies, would be when's your break even point, right?
Yeah.
Is it year 12, 15, 20, or is it closer to like year 10, 9, 8? Because that's going to give you all the information you need to know too. If the person you're working with knows what they're doing, knows how to structure these things, so you can be as efficient in your policy as possible.
Yeah, that break even point is so important to look at. Like, if I'm talking to my cousin or my friend who's working with a relative on a whole life insurance policy and they say, like, this stuff's confusing. How do I know I'm getting it right? The way I like to simplify it is if you're getting this policy for cash value, any amount of money you're putting in, make sure the first year is somewhere between 80 and 90% of what you paid.
Right.
And that break even point usually should be somewhere between 3 and 5 years.
Okay.
If it's doing that, that means the policy is set up with a minimum premium, maximum cash value. It is going to result in the agent you're working with, they're going to reduce their compensation in order to do that. Now, long term, they'll still make money, so you don't have to worry about them not making anything.
Hmm.
But I say that because in the insurance industry, agents are incentivized to sell policies with low cash value. No matter how you spin it, that's how it works with how insurance companies compensate them. So I always like to say, look at the first year cash value and then the break even point. If those look good, everything else usually falls in line.
Right. It meets
Yeah,
that formula. Yeah, that makes a
yeah,
lot of sense to me. And I feel like some people, I've talked to some people about this stuff and they already may have a life insurance policy and maybe even have cash value. They don't even know about it.
yeah,
It's like maybe you have cash value in there, but like see the terms about using it because I know mine, I can get it no problem right away.
yeah,
No taxes, nothing like that. So I don't think
yeah.
they're all set up the same. I'm not sure though.
Yeah, no, a lot of times they're not. And in most cases, it's really just lack of education or knowledge around the product from a customer's perspective,
Hmm.
which, frankly, too, if I'm buying a product or service from anyone, I don't always want to fully understand it. I just want to know that it works and
Right.
that the person that I'm working with is setting it up the right way. Like that's how I often approach things. But at the same time, with life insurance, it's tough because there's so many different ways to set it up. So it's just having the awareness of what's good versus what's not good. That's all.
Yeah. And I could, and that's a good thing about doing your research and just seeing what's out there. I'm sure there's so much more information out there now that there was 10 years ago,
Yeah.
even just on your YouTube page. But your early content, the way you broke it down, it really resonated with me. It really makes sense. And when someone can take something complex and simplify it and kind of teach someone who doesn't really know what they're doing, then you're dealing with someone who knows what they're talking about, right? Who can
Oh,
teach it. So that's why I've always been drawn to what you're doing and in your company.
got it. Thank you very much. I sincerely appreciate that.
For
Yeah,
sure.
I
Yeah.
do.
That was not a paid advertisement.
Yeah, no, 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 no. Yeah, I don't even have to ask you the next question, which is going to say what what led you to working with us. You kind of answered it
Okay,
there.
yeah, no, absolutely. It
Yeah,
was taking something really complex and simplifying it in the way that I understood it. I remember sitting in my living room with one of my good buddies at the time, and uh, we were like, "Wow, this guy, he's breaking it down real good." So
yeah, yeah.
it's
You can
helpful.
the boring insurance guy, right? With that whiteboard. Yeah, I do enjoy it too much sometimes, but it's all
People
good.
get bored
Yeah,
talking about money, but it's
yeah,
like this is your money. How do you get bored talking about it? Like,
yeah,
you know, figure out the game, play by the rules, and then you should be fine, right?
yeah.
Barring any crazy events, life events.
Yeah. Well, like figure out the game. That's the hard part right there because it takes a lot of time.
Those,
Like if you just isolate life insurance, that's one product that's going to take a large amount of time you'll have to invest if you want to understand it to the level of being able to give others advice and such.
yeah,
It's hard to do.
sure.
If you take another product like crypto or somewhere else where you can invest your money, it's challenging.
Good
Like,
point.
yeah, I mean, typically, when are you uncertain or uncomfortable with putting your money somewhere? When you don't understand it.
Sure.
At least that's me. So, A, understand it, or B, don't do it. What probably isn't smart is just to blindly throw your money into it. Some people have,
Yeah.
it's worked out well. Most it has not in that
Right.
particular case. But to actually understand it, it's going to take time.
Or C, work with someone who does. I've
Yeah.
found that, later in life, is like early on, I couldn't always pay an expert to look at my finances or to give me wealth management, things like that. I had to kind of learn it myself and make decisions from there. But if at all possible, link up with someone like yourself or whatever you're doing who's an expert, and let them drop some knowledge,
Yeah,
guide you.
I'm with you. That part's huge. Like I'll leverage some people just in my very small network as much as I can because of their knowledge, whether it's in tax, legal, business planning, whatever, that helps quite a bit. Otherwise, you got to take the time to learn, and it's tough to do with life when you've got a million things going on. Yeah.
100%. Absolutely.
Yeah,
Absolutely.
definitely. So, last question. If you were to do things all over again, rewind the clock 10 years, would you do anything differently?
Uh, I'd start sooner.
Yeah,
I
that's
mean,
the,
really, it's one of those things. It's changed my financial landscape for myself and my family,
yeah,
right? Leveraging these policies and investing in them. Um, it's I would have started sooner.
yeah.
Mhm.
That is something we hear probably the most. A lot of times from older folks, not always framed the same way.
Yeah,
It's usually, I wish I would have known about this sooner.
yeah, sure.
Yeah, which I get. I mean, had you ever been exposed to whole life insurance prior to researching it with us and similar groups from a cash value perspective?
I don't
Okay.
think so. Uh, no, I mean, again, I was in my early 20s, mid
Yeah,
20s.
got it.
Thank God my sister, said, "Hey, check this out. This sounds like a great place to do stuff."
Yeah, look at that.
Yeah,
Yeah. So that's really good because most people, when they're exposed to whole life insurance, they're exposed just to the traditional type with no cash value up front. So you did start in the right area in that respect, just as far as approaching it for the cash value. This way you can see it for what it is.
absolutely, man.
Very cool.
Yeah, I have a random question for you.
Yeah.
So strategies with whole life insurance,
Yeah.
cash value and life insurance. Any thoughts or hot takes on how that might change or evolve given like the current political, financial landscapes?
Yeah, definitely. So I don't know that it'll change too much. Where people typically really like using cash value life insurance is as their own personal line of credit, or like you said, your own bank, because it's a safe place I can put my money. I know it's going to go nowhere but up. I've got the tax benefit, and when I want to access the money via a policy loan, it keeps compounding and I get it fast. With everything going on right now, people all are one, nervous to put their money in the market. So
Mm-hmm.
it's a safe alternative when they compare it to that, which is nice. We don't recommend cashing out and putting in life insurance. Full transparency. Now
Yeah.
everything has a place. But like where I've seen people use it heavily is in a market correction when opportunities become available, if there's a real estate correction, for example, that's often where you'll see people that have built up a lot of cash value tap into it in order to move quickly on a real estate deal.
Sure.
It's the exact same concept, by the way, of just sitting on a bunch of cash to lean into the marketplace. The
Yep.
difference is someone says, well, I'd rather put it into this insurance product because I'm more comfortable with it here compared to having it in the bank just with the FDIC limits or a million other reasons. Some people just
Yep.
don't trust banks, which I get. So they've got that security there. The tax benefit is huge, especially for those in higher income tax brackets. And the fact they can just move quick. Like that is the biggest thing, particularly with those who are entrepreneurial, whether they own a business, they invest in real estate. We see that the most. They
Mm-hmm.
just want to be able to move quickly. So, with everything going on right now and the uncertainty, that usually breeds opportunity in one form or another. So,
Sure.
if you have someone, yeah, who's very liquid, where they can move in or push into the marketplace, that's what a lot of our clients do, where I see messages in some of the groups we're in with our clients where they say, stay liquid, something's coming. Like, all
Yep.
right. So they yeah, so they're like staying liquid there. So not necessarily a change as far as how they're using the policy, but more awareness has been brought to the product, which is great because more people are doing it and just knowing how they can use it. what to do, what not to do. And when an opportunity is there, okay, I want to borrow against my policy to invest in this piece of property, but what does it look like if I don't pay it back, if I pay it back, and we'll just educate them on that, and then they
Yep.
understand it and do it more.
No, that makes a lot of sense. And
Yeah.
that's spot on, I feel. And it's really expensive to borrow money right now.
Yeah. So right now the rates are more favorable for the most part with insurance products compared to going to a bank.
Sure.
We'll see what happens. Like if we had this conversation 3.5 years ago, it was much more advantageous to go directly to a bank from an interest rate perspective. And there's things people do, like in that case, in that situation, if my policy loan rate is at 5 or 6%, and I can get a loan from a bank at 2.5 or 3%, like several years ago.
Yeah.
What people were doing was taking their policies to a bank, assigning the cash value as collateral to them, and getting a line of credit. Banks often view it as if they're loaning against cash, so the interest rate is very, very low, which is pretty
Interesting.
cool.
That's cool.
So that way you'll get a very low interest rate. So there's ways you can leverage it there both ways, whether the interest rate environment is high or low. But right now, for the most part, loans directly from insurance carriers within my product is lower with most companies.
Yep.
Not all, but with most. Yeah.
Got it. Yeah,
Yeah,
that makes sense.
definitely.
And just the return, right? Like I read recently that the S&P predicts like a 3% return over the next decade, like
3%.
averaging three per year over the next decade. And I thought that was ridiculous, kind of terrifying. Don't know if it's going to be true or not, but
Yeah.
that's what people, like you said, it's uncertainty. And I
Yeah.
know my Mass Mutual or my Guardian does better than that, right? But
Yeah.
not three.
Yeah, I mean, so your policies will do somewhere between 4 to 5% per year, a little bit stronger actually, because they're seasoned now, but that's without any risk. You've got the tax benefit with it as well. You can access it and it keeps earning that return even when you've accessed it, and it's just slow and steady year
Yep.
in and year out. And it's the same thing, which you'll see a lot of people leverage happened back in 2008. Just when there's all that uncertainty, business owners who had money in their whole life insurance policies, it just kept going up. They could leverage it.
Right.
Yeah, I mean, it's been going on for a while. It's just the awareness. Yeah.
Absolutely. Yeah.
Hmm.
It would be a tough time right now to be ready for retirement, right?
Yeah.
I can only imagine and not have a whole life insurance policy. And depending on your 401k or your nest egg that was in the market, and especially right now, that's,
Yeah.
I want to be in that position one day,
Yeah.
right? So that's why I'm staying diversified,
Yeah.
especially with these kinds of plans.
Yeah, good move. I've always liked your approach to where you are diversified. You are taking on some risk, and then you've got your safe money. Like there's no one
Right.
size fits all solution. There's not. Now I say that, and it's not meant to be hypocritical because most of my money goes into my business and whole life insurance policies. But I
Hmm.
mean that's my thing. Like that's what I understand the most, so I
Right.
I do that the most.
Of
But
course.
yeah, it's always good to be diversified. I
Yeah. I'm
want
just a
balance.
regular guy, right?
Yeah,
Like 9 to 5, got a family,
yeah,
build a house. So I
yeah.
don't, diversification and balance is the name of the game for me right now.
Definitely, definitely, as it should be for most of us. Well, really, really appreciate your time today. Anything else you wanted to share before we wrap up?
No, no, that was it. Steve's your guy, everybody. If you're watching this,
Thank you.
Steve is your guy. Highly recommend.
I appreciate that. Thank you very much, Gio. Again, appreciate your time today. If anyone has any questions for us or for Gio, feel free to leave them in the comments below. And until next time, we'll talk to you soon. Thank you, Gio. Really appreciate your time.
Bye, Steve. Good
All
to
right,
see you.
thanks.